unfortunately.
Next on our list is Murray and Roberts. This one used to be one of the industrial giants of South Africa, established in 1902. Operations global, big operations, of course, here in Southern Africa, Africa generally, the Middle East and Australia, as we'll see in a little bit. Quite a big oil and gas business that it got into in Australia with Clough. That was the access that they bought their way into that market. Market capitalization after a couple of rights issues and a couple of tough years is 5.9 billion rand. Price earnings ratio of 6.26, that's very low. Dividend yield of 3.7%. Let's look at the share chart, because the share chart will show you what we're talking about here. This one has lost value, 42 rands, and the share price was well above 105 or something at the height of its market insurgency. Now trading, unfortunately, at that number, which I think is just above single figures, 11 rand or something like that.
Yeah, look, I mean, they've had the most difficult time. Climbing into oil and gas, wonderful story. Oil price was rising. We're going to make a fortune out of this. And it just, as we all know, has totally and utterly collapsed. They've had to do big write-offs. You know, they've got 4 business units, oil and gas, which they say they're going to continue with.
That was the thing where they built that wonderful, huge LNG offshore portfolio, Gorgon, which was kind of on the western side of Australia. And
so they say they're going to stick with this, and they're probably right to stick with it, because, I mean, I can't see the oil price staying at this level forever. So they're probably right to stick with it. They've got water and power, which I don't think's operated too badly. They've got infrastructure, which is okay. And then they unfortunately also got mining, which is also in deep, deep trouble.
And that's a big part of the business. And it seems like contracts to do the underground infrastructure of Boysendal and so on, that's sort of ongoing.
Yeah, there is some, but I mean, you think of any mining company that's got big money to spend on new capex, or even you know, a lot on maintenance capex. It's just not there.
So it's any sort of shaft sinking and stuff.
There.
Let's talk about the preceding period, though. They do, I think, have finally put behind them the drama associated with the Gautrain and some of the Dubai airport and stuff.
It seems to have disappeared.
The final arbitrations are coming through, and in large part they provided for the worst case scenario. I don't think there's any more anything good happens.
But I mean, they've had more than their fair share of disastrous contracts. And these things, you know, once you get into dispute, just lasts forever. You somehow never get out of it. And this has severely affected the company, obviously, over a long time now.
It's the damn lawyers, you know. You get into this thing where you're busy fighting with Gautrain or something, and then you've got 16 advocates on your side and 45 attorneys on their side, and everybody's having a fabulous time.
Gautrain as a business is phenomenally successful. I mean, they reached capacity, I don't know, 6 years before they thought they were going to. They're running out of capacity on Gautrain.
And so this argument inter alia is about slight delays in getting it up, or like the walls between here and Park Station that were leaking a little bit.
The water was, and surprisingly enough, the walls were always going to leak. They just leaked. Just the pumps couldn't keep up. So it was just more water than what they anticipated. On this.
And I'm not to trivialize the matter, because of course it all comes down, sometimes in these cases the dispute is the eventual profit you make on a multi-billion rand construction.
And you know, these were still projects where they were supposed to make a fortune, because at the time when they got these projects, there were more projects and construction firms, so you could just about charge whatever you wanted to.
Well, on that score, so the group is under new management. You get the feeling that Henry Last has done a great job in terms of slimlining and streamlining and organizing the business units.
But what else can you do? But to get this to move, you've got to get a higher commodity.
Been through a rights issue, that's all behind them. Carl Grimm era is all gone. The fines associated with the 2010 thing has all sort of kind of gone down the line. So again, the question is, the order book, you know, it's 38 billion. It has fallen from what it was before. So they are a smaller, slimmed down organization. The Australian thing, I don't know. It looks like the market has taken a rather dim view on a 6PE.
Well, the market's taken a dim view on all of these shares. But Murray and Roberts in particular, you've got to get a recovery because of their mining and oil and gas. You've got to get a recovery in resource prices. So effectively, they're almost a mining company now. You'll make the same investment decision on this as what you would on Billiton or Glencore or even Anglo-American, because it's the same drivers.
So we might see a slim rally at some point, but what it needs is a sustained 6-month uptick before people get interested again.
I would think so.
Okay, so not hot for now.
Not hot, no.
Good.